Right, guys, I want to have a chat to you guys about risk management. I've seen a lot of people recently burning their wallets on just a few little trades. What I want to just talk about is not exposing yourself to too much risk and using a tiny portion of your actual trading balance and making slow but steady and consistent gains to actually build that portfolio. Now, as you can see in front of me now, you can see a lot of red and greens. What I want to show you is like, if you look at some of these trades here, let's focus on the percentage amount. You can see like my average sort of target is 1%. But if you look at the dollars, I'm making $7 there, barely $1 on that trade. You go up, there's an $18 loss, but before there was a $79 gain. Now, if you keep that in your head right there was also a $75 loss right here. But as you can see in the meantime, this all adds up. In total, this right here is from the end of September to now. That is a total of $811 based on the current rate. So this is the summary profit. I'm using free commas to show this. The reason why I use free commas, it's just an amazing tool for tracking. And also the smart trade feature is incredible. But I don't want to go over that in this video. I will make a video about that at a later date. As you can see here, the summary profit, I'm overall in profit. And you think like making $811, but I'm making all these tiny little trades. Everyone wants to go for that big trade like this. I do get lucky and you do have them, like this $79 trade. Everyone wants them every single trade, but I can tell you now, if you're going to do that, you're going to get yourself wrecked. Now, I put together some little data. These are a collection of data from a few friends of mine. So this is based off one Bitcoin trading balance. And this is based off the current balance, current price of Bitcoin. So what we've got here, if you use a 2% balance per trade, 5% balance per trade, and 10% of your balance per trade. So what we see straight away, sorry, that's using 10% on that. What you see straight away is the profit here. So $42 on the 2%, $39 on the 5%, and $38. So we can actually see the 10%, which people would think would be the more profitable, is actually the least profitable. Although it has these super big trades which look nice and juicy, you do have a $27 loss. Now, the obvious thing here is, why are these getting less profit per coin, less profit per strategy? And the reason being is, so for example, if you use all of your funds, you can only open a potential of 10 trades, 20 trades on the 5%, or 50 trades on the 2%. Now what's happening is, when you're using a total of 10% of your funds, in this duration that we did, this is over basically a couple of days, the 10% one was locked in trades, and because all the balance was used up, it couldn't open other trades to make back those losses. So what you'll find with the 2%, although some trades took longer to complete, in the meantime, it was able to open more trades and take profit on them because it had more funds available to do so. So what you're looking at here is like the more profitable method is the 2%. Now, let's say on the 2%, a trade goes south like these ones, minus 3.2%. You're only losing $5, $5.50 on that. But whereas on this one, if you see, you're losing $27 in one single trade. And you've got less trades to make that profit back. Whereas in this one, that one trade, you've already made it back in a few trades. Like literally 1, 2, 3, 4, 5 trades, it's made it back straight afterwards. Whereas on this one, we did make a $27 before, but if you look at, let's say, that one, it would take you quite a while to make that profit back again. So what I'm saying to you guys is, you don't want to expose yourself to more risk. With the 2% one, let's say, for instance, you was in like 2 trades right now, and all of a sudden Bitcoin just went mental. You hit your stop loss, you lost money. It's not a big hit. You'd look at the general picture on your overall portfolio and it'd be on an uptrend. And you'd see this bad little dip where Bitcoin's made a big move, or the alts crashed or something like that. You're not going to put a dent in your portfolio with 2% of your total balance. You can just exit that trade, take the loss, move on. But with the 10%, let's say that coin tanks down, you're going to see a massive hit on your portfolio. You're going to see this big dent going down. It could wipe out days worth of trading. Sometimes, it's better to take those losses, just step away. By not exposing yourself again to too much risk, that's how you win. So as you can see here, the general overview here, that it's more profitable to do those small trades. And guys, I just don't use too much in your balance. I mean, some people even think 1 to 2% is too much. You know, think sensibly, use the right amount and be patient. It will grow over time. You can improve your strategy. You can just grow. That's the best thing, is just grow. I just wanted to make this video, guys, just to explain to you about that. It's something that I've been doing for quite a while, and ever since I've been doing it, I've seen a positive growth. I'm not saying I'm perfect. Years ago, I was greedy. Last year, you know, we had the big run, and then we had the year before we had the big run, and then we had the alt winter, as we call it. During the alt winter, you know, I made big mistakes, and that's when I started to learn and make that money back. And this single-handedly was the one thing that helped me managing my profits. I just want to pass this information to you guys. I hope you enjoy this video. If there's any questions, just send me a message. I'm always around to chat.